Hello and welcome to the paid weekly recap for the week ending October 31st, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Before we get started, normal disclosures. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not an investment advisor and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap for the week. So on this week, we had the 10-year yield start to run back up. We had a Fed meeting on Wednesday, and we had a negotiation and maybe a settlement, at least for now, with China on trade negotiations and rare earth minerals and all that sort of stuff. So this potential for a breakdown in the 10-year yield, a concern that maybe we'd start to drop down below 3.9, didn't come to fruition. Instead, we're back into that range of 4 to 4.2. 4.1 seems to be a fair value right now for this market, and it's driving a little bit of rotation amidst a generally bullish equity market. So the markets on the whole made a new high on Wednesday, but we had that pullback on Thursday as maybe people were just not quite as pleased as they were hoping with the negotiations with China in terms of trade. Bounced back on Friday using the 10-day moving average as support. Overall, earnings this week were fine. A couple of good ones, a couple of bad ones. But at the end of the day, the market did make a new high once again and did have a pullback once again. So it's another sort of repetition of this process where we make a new high and then we have a little dip. And then we may be looking to make a new high next week or maybe having a further dip before that next high. But this has just been the repeated process of make a new high, dip, 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 over and over, lather, rinse, repeat. So it's a bit of a difficult market, especially given that overall, while it's been in a bullish trend, that's been a very stock pickers market. There's not been a ton of stocks that are rallying. There have been many more consolidating with a few running wild. Tech has been generally bullish and has been leading this market, which is generally a good sign. So tech getting to a new high amidst all of our tech earnings for this week is overall generally bullish for this market. And the pullback didn't even quite test that 10-day moving average. So overall, again, looking like a bullish trend for the broad market, looking for a bullish market for tech. And then we have small caps, which have been a bit more grind higher mode, dipped back down near the 50-day moving average again. But again, small caps have been in a bull trend, and we're at the lower part of the trend right now. If this 50-day moving average doesn't hold, that would be concerning for small caps, which would then generate potentially some concern for financials in particular, as well as maybe healthcare and industrials. So once again, we've got a bit of a bull market, but a choppy bull market with a lot of stock selectivity. And amidst that, we've got the VIX actually getting a little bit higher this week, up to 17.4%. So after attempting to break down and maybe push down towards 14, 15%, which seemed like a natural conclusion to maybe some negotiations happening with US and China in trade, we didn't actually see that come to fruition. So people are looking to hedge right now, and they're doing so via buying puts or put debit spreads. And the market is teetering around that all-time high. So right now, the VIX is still generally low. We did hit a level very close to 30 when the China trade situation seemed to be going negative or more negative. But now we've gotten back to a much more normal level. Looks like there could be a little bit of downside if the markets do go back to new all-time highs. All right. And on that note, we did have a couple of trade ideas this week, but the stock selectivity did not necessarily help them. So we had CME, which looked like it was ready to break out of a trend, testing the waters above the 100-day moving average and then quickly failing. So on Tuesday, we started just above the 100-day moving average. Looked like we may get a breakout to the upside and potentially push 280 or even 290, but instead a quick reversal. Wednesday was particularly negative for CME, but then a bounce back right back to the 200-day moving average. We may have found some support here, but we did look for the exit just because we don't have that bullish momentum that is necessary for a long call position. So over that 3-day period, we had a 2.2% fall in the stock and a 55% loss in the options as the leveraged move was frankly to the downside, particularly on Wednesday. So unfortunately, a loss here in CME. It does happen. Of course, we were looking at an inflection point, and oftentimes when you get to that inflection point, it's either higher or lower. And in this case, we got to see the lower scenario. Had we seen higher, I think we would have been seeing some very leveraged returns. But it's nothing's ever guaranteed. And so in this case, without a breakout and a pullback instead, we did see a loss there for the CME options. Similarly, MNST has been grinding higher, was looking to find that continued support at that 10 or even the 20-day moving average. And on Tuesday, things looked okay. We had a lower open and then a bounce back. But then on Wednesday, similar to CME, we just had some major liquidation, major pullback down to the 50-day moving average where we appear to be finding support, but it was once again a lower high and a lower low. So rather than holding on and looking for that into next week, moving on and trying to look for better opportunities that are more of a breakout type candidate, which MNST looked like it may be early in the week. Ultimately, that failed. So another failed breakout, and over the 3-day window, a 3% or 2.9% loss in the stock and a 43% loss in the options. So the pullback again hit us on the entry here. But we do have some new opportunities coming up this week that look particularly exciting. So a couple of new ideas this week, looking for that continued bullishness and some potential for breakouts as they're trading near recent highs. So definitely keep an eye out for that. In addition, please make sure you're joining us in the live trading room. We address all sorts of questions related to paid, stocks that we're looking at there, as well as stocks on the broad market and other AI-generated signals. We look at other complicated and complex option structures such as debit spreads, credit spreads, butterflies, calendars, all sorts of interesting trading setups, and try to have an educational focus on that for those looking to add more tools to their toolbox. And the results generally speak for themselves. A really solid return over time. Vlad and I are always happy to answer any questions you have or evaluate any stocks you have from an options perspective, as well as a technical perspective and an AI perspective. So if you can join us from 9:15 till 10:15, 10:30 Eastern in the morning, or 3 to 4 o'clock in the afternoon for the closing bell, I urge you to do so because we do have a lot of valuable information to pass along and some commentary on how we as professional traders look at the markets in many different ways given current market conditions. And if you can't reach us on the live trading room or can't join us, you can always email us. I'm Keith at yellowtunnel.com. Vlad is Vlad at yellowtunnel.com. Happy to answer any questions you may have. So please do join us on that trading room. Look at your inbox Tuesday morning for new trading ideas, trading opportunities, because I think there's some really interesting stuff starting to brew in this market as we start to get a bit more predictable as we get through this earnings season and get some trade negotiations behind us. Thanks again, everyone, and looking forward to another interesting week in this markets.